Hey everyone, my name's Andy. My channel is Finding Value, and what I'm doing is I'm scouring the world for the most undervalued investment opportunities, and then I present them on this channel. And you guys can determine if you want to participate after doing your own due diligence in those investment opportunities. So I'm reading through the subscriber comments. One of the comments or questions is, what are your thoughts on far-off producers like Fission, NextGen? Great assets, but I think mines close to production will provide better returns. That's a really good question. And I actually prefer the developers over some of the producers. And I know that sounds weird. I've got this weird kind of brain in relationship to some people. So a lot of people have the same thought as you. Get some of the ones that are already producing or very near production, and they will do incredibly well as they can produce earlier. But this is from me. This thought is not developed by someone who is an insider. But I always thought those who are close to production will negotiate contracts first, which potentially could be at lower prices. And a company that is a higher cost producer would negotiate contracts later in the game, which could be beneficial. And I don't know if this is going to play out this way. But if you're a bannerman and you can't turn on production until $60 or $70 or whatever it may be, what if all those guys that are low cost producers are like, yeah, we'll get into contracts. They start contracting at $50, $40, $50, $60. And let's say they run out of basically uranium developing companies, and everyone piles in at the same time, and the price shoots to $200 or $300 a pound. Everyone else has contracts that are locked in, but some of these developers don't. So I like to have a mix. I think having a mix is where you can do very well. So I own a lot of developers. I own a few explorers, like a little bit in all the explorers, not a lot of money, just it's spread out amongst a bunch. And then I don't even know if I own a producer. I don't own Camco. I don't own some of these other ones. They're mainly developers and explorers. So there's that. They're asking, can you put me onto the path of some platinum ticker symbols? Well, there's three that people like very much so on this channel. The three that people talk a lot about are IMPUY, which is Impala Platinum, ANGPY, which is Anglo Platinum American, and then there's a small company which is a developer. It's Platinum Group Metals, PLG. Those are the three that I am familiar with. Now, there's other ones. There's like Big Ten or whatever. I just don't know that much about them. So that's enter at your own risk or do your own due diligence. And again, I do own some of those companies that I just mentioned, but I also like the physical metal itself. What a day. Copper absolutely blew past its ATH. 10-year fell hard this morning and then rocketed back up. DXY is down big. And he's following the right things. You want to follow the dollar and you want to follow the 10-year yield. If you can follow those two things, you understand kind of which way commodities are going to go. If you see a weak dollar and the 10-year is flat or lower, more than likely the entire commodity sector is going to be strong. I feel bad for people who listened to Chris Vermillion and sold uranium. Could have cost me thousands of dollars if I had sold the past few days all the way to the moon. Guys, I don't want Chris, he's a good guy. Like I don't know. The only thing that got me a little weird there is he made the comment like the volume kicking up is like selling off. He knows it's not. I mean, to me, volume's kicking up because everyone's piling into the sector. You see that at bottoms. So I don't know. I don't want to say anything about him. He's probably a good guy. So I'm glad I deployed the rest of my money last week. Chris is a smart trader, but yeah. Can you chart TALO 1 year cup and handle? I can do that in a bit. I'll go through all you guys and do a subscriber charting. CME lowered gold and silver margins. What the heck? Why? Is it a trap? Get people to buy paper silver instead of physical, trap them, then lower silver and crush them. Where is their plan? I don't believe they are trying to help us. A good question. I don't know. What I do is I buy physical metals and I don't even worry about the paper price anymore. I think with time, the physical is going to just disappear. I don't think. I don't know. What they're going to play their own games. I'm not even thinking about that. So I don't have any comments really on it. probably trying to entice people into the paper markets. Fantastic video. If you get a chance, graph Marinica Energy. I think that's in Australia. You know what? I don't know much about Marinica. Their charts, I think that's the one that was like pretty flat. Same with Peninsula Energy. I don't know much about it, so if I don't like charting things that I don't know much about. I'd have to really start digging into all this. But I could chart it. I can throw that in the list of people who want their companies charted. I think Anfield was one that somebody was asking about as well. Pure point equals cheetah mode on. Well, yeah, it's breaking a big resistance line. And even some of these companies, like a Laramide, they may go sideways for a little bit. And Goviax, we're buying them early. They'll go sideways and then eventually they'll break. Because if you have the entire sector and the dollar falling, the entire sector moving up, it's just a matter of time at that point. So I like to buy things that are below their breakouts, and I'm just patient. I'm not looking for quick returns. I'm accumulating value and what I think are good companies at good prices. So I got to be a little suspicious of all these news releases. Andy, what do you buy? Physical silver or silver mining companies? I own both. I own a good portion of physical silver, and I own a good amount of silver mining companies. Some are producers, some are explorers. It's a mixture of both. Coming down. Do you know any undervalued junior copper miners? One thing I want to say is the junior copper miners, a lot of copper mines are gigantic and they take a lot of money to put into production. So you're going to make a lot of money on the big copper mines. These smaller ones, they'll do okay, but they don't have the money, the backing, all that stuff like the big boys do. So what I like to do, and what my favorite pick is Nova and EMX. So those are both royalty companies. What they do is they're getting royalties on these big deposits that are going to be produced. And if you can lock in those royalties and you're first, you're going to kill it because the price, the input costs don't matter. And if you have this gigantic production, then you're getting revenues from this production going up and from the price going up. So you have all the upside potential with none of the downside risk. So one that I loaded into is Nova Royalty, NOVRF. That's one of my favorite royalty companies in the copper area. EMX is another precious metals and other, we'll call it other special minerals. That's pretty good as well. EMX Royalty, ticker symbol EMX. Yeah, Copper Bank's not too bad for a junior explorer. I own that. Same with NGEX is another one that I own. What's my thought on UROY? That's the uranium royalty. That is, some people like it, some people don't, but it's a good pick for the most part. And they don't have any production. They're all developer mines, so it could be good. But there's no income happening for uranium royalty unless they got some new ones. I know this was when I first looked at it. That was a long time ago. They probably added some new stuff. So I'd have to recheck that. Do your own due diligence. See where the royalties are coming from. So that might have changed since I've looked at it. Says, do you do any fundamental analysis on which all of these are best of the group? Now, here's the tough part on doing fundamental analysis. Fundamental analysis works great when what you have to do is you have to project future prices. The price of the commodity is the most important thing. And what I like to buy is probably not going to look great on a fundamental basis on some of the companies. I like high cost producers, some that have some debt that people hate. And then what they do is they sell these things off all the way down to like 1% of their all-time high. And I look at it and say, well, I don't think they're going to go bankrupt, especially if the price is going to revert and come back up. So if you're good at chart reading and you can time bottoms pretty well, I think the high cost, unfavorable companies sometimes can be a better value, only because everyone else doesn't like them. So you're a contrarian within the contrarians. So you could say that I'm a contrarian within the uranium sector. And I buy all these companies that people are like, ew, they've got debt, or ew, they've got a high cost production. I'm like, perfect. Because when you go and the prices move up, and if they were to go into production, their profit increases faster than a lower cost producer. So if you have, you've got two things. You have a $10 pound uranium producer and a $20 per pound. I'm just making this up. So one's 10, one's 20. The price is at $20. The 21 is making zero. The 10 one is making $10. It goes to $30. The $20 one went from making nothing to a whole bunch of profit. And that the earnings per share goes from zero to infinity, so to speak, because they went from nothing. And when you can't divide by zero on a percentage basis. So you get these gigantic moves in the high cost producers when they go higher. I am not saying that all you should do is go buy a bunch of high cost producers. That is not what I'm saying. What I'm saying is be aware of it and look for both of those companies. Look for a low cost, look for a high cost. Spread your risk out. Portfolio allocation. Do 1 to 5% of your portfolio allocated to some of these companies, and that portfolio allocation will limit your risk to a problem company. That may be a high cost producer, but we're under the cost curves of it. That's a good question. It says, watch out. Rick Rule says that oil and uranium stocks are now too high, so you will sell. He wants to buy your stocks. He missed the surge. I don't know. That very well could be true, though. Actually, I do have a crystal ball. Uranium go boom. Nice one. Andy is the GOAT in commodity sector, especially uranium. Cannot believe this channel is yeah. John Quakes is really good. I know he's done some stuff on Twitter and retweeted stuff for me. I'm not the GOAT, guys. I just read some charts. I try to help you guys out. And remember, not all my picks are going to be 100% right. I'm working with statistical probabilities. But in the long term, I think we have a lot of really good picks. And if you can diversify out, you get your favorite companies. And remember, I'm looking at this thing from multiple viewpoints. I'm looking at it from the management side, like a Deep Yellow, John Borshoff, all those, the management team that they have. Encore Energy, Bill Sheriff, the CEO, and all those guys, and his technical team, which is very good. And then I look at some of these other companies. I'm looking at the charts to see how powerful they are. And I'm trying to combine all of it together. We've got the ratio that's really cheap in the sector. So it's just one after the other. What it is, it's like 7 stars that are all in alignment right now. There's just a whole bunch. And when you get that alignment, that's when price really moves. And what I'm trying to do is get that alignment and help you guys and show you guys what to look for and some of the companies that I like because of that alignment. Last time I watched your channel, many times I was asked about Anfield. Never any reaction, just not interested, or I will not look into it. I'll chart it for you guys, just patience. I'm getting a lot of requests. Someone did some call options, it looks like, on Hecla. It's a good job. How do you guys feel about putting money into OTC markets? I do that. I feel comfortable doing that. Doesn't mean that you put everything in it, but I do put a good amount of money. Says the fellow Chris Vermillion doesn't know yet. He tells guys, he knows quite a bit. He what he does is all of this charting is statistical probabilities. And what he's doing is he's probably looking at this saying, well, the statistical probability is this way. I look at the charts a little bit different. I'm looking at it from this very jaded view where I think the dollar's going to go down. And I know that we've got this expansionary phase in real estate. That is inflationary. So I've got a huge slant on this. And the best that you can do is get your companies and just hold on. I don't even if I'm wrong and we pull back for a month or two, that's okay. I can hold on. I'm patient as heck, but I want to get my shares. I want to make sure that I am in it before it moves. So I've got this very slanted view of the market conditions that other people may not hold if you're only looking at charts. Yeah, PurePoint. I've done a lot of charting on PurePoint. It's an exploration company. It does have some risk. All these exploration companies have risk, and I just put a little bit of money in it. I do own PurePoint, so yes, it is a good. It's a good company. I think they're good. It says held Hecla for years, only to sell 2 months ago at 6 or 7, and sold Franco-Nevada. So kicking myself, but needed the money for uranium, so it's all good. Yeah, most of the stuff, you guys develop a plan and just hold on. They're all good. Silver, uranium, they're all good. So that's I'll end it there. Thank you guys for commenting. Thank you for keeping it pretty clean. I appreciate all of your guys' comments. Thanks for making this channel what it is today. And hopefully we all get rewarded over time. The more patient you are, the more focused you are, I think the better you'll be in the long term to just hold on. And hopefully this channel provides that value and that foresight and vision for you guys to hold on through thick and thin, because we are in a structural bull market in commodities, which will manifest itself in a weaker dollar. And it's all coming. You'll get rewarded. So thanks for listening. This is Finding Value.